All right. Well, while we're waiting for folks to join, I know we have a number in the webinar today. Again, I'm Tim Slattery, president of the Tennessee Automotive Association. As most of you know, I took over this role. I celebrated my first anniversary this past week, and it's been an honor to represent you all as the head of this organization. Obviously, you've been under fantastic leadership with Bob Weaver, who continues to work with us. But today we wanted to do a webinar. Now, this is the first webinar I've done in this role, but it's such a critical issue to your companies that we wanted to make sure you had the insight from one of the top CPA firms in the country. We'll talk about HHM and Robert in a minute, but this is an issue you're going to be hearing about from TAA literally probably more than you want to for the next 2 or 3 months. A lot of you will take care of the refund issue in short order, but we want to make sure all our members who are eligible for potential refund with a hard deadline to get that refund if they're eligible. So joined with me today is Robert Malone. He works for a number of TAA members. He's based here in Tennessee at the Chattanooga office of HHM CPAs. HHM has been a longtime partner of TAA over the years. They host our regional meetings across the state and some of their offices. I'll let Robert talk about the offices of HHM. With that, I'm going to kind of turn it over to Robert to tell a little bit about his firm, and then we're going to jump right into the refunds. I think a few housekeeping notes. One, you'll notice a Q&A or a chat. Anytime during the presentation you have a question, you feel free to enter that question, and there's a way to do it anonymously. It'll only go to the hosts and the panelists, and we'll answer those questions at the end. So we want to be able to offer an opportunity for you to get, some of these are very complicated issues, and we want to make sure we get to them in a simple and efficient way. Robert, if you want to go ahead.
Tim, thanks for the intro, and we're honored to be presenting this with TAA. It's like you said, it's been a great partnership for the firm and for our dealer clients in Tennessee. So we appreciate the opportunity. Real quick, I'll highlight what we're talking about today. It's the new Tennessee franchise tax law, potentially refunds for many entities across Tennessee, specifically today dealers, how it impacts you. And so we've got a table of contents here, just a quick snapshot of what we're going to be talking about today, a little bit about the legislative history and the background, how you claim the refunds, and how much you can expect if you are eligible for a refund. But before we jump in, I know several on the call today are already HHM clients, but just want to give you a little brief history of HHM, what we're doing now, and really why we're presenting today. We're a standard full service accounting firm. We're based out of Chattanooga, Tennessee, and we've been in business for 40 years. And we have an office in Memphis as well. As Tim said, we've hosted TAA meetings in both the Chattanooga and Memphis office. We started in Memphis about 7-8 years ago. And then we have another office in Cleveland, Tennessee. So 3 locations in Tennessee. And then we just opened a Florida office as well in Pensacola, Florida. So full service accounting firm, we do all the basic accounting that your typical CPA does, but we really focus on our dealership clients. I would say 40 to 50% of our business now is focused on dealerships. That's 40 to 50% of our revenue. And some things we do different, maybe that other standard CPA firms don't for our dealers, is we handle a lot of buy-sell activity for our dealers. We help them with financing. We participated in about $4 billion in mergers and acquisition transactions over the last 4 years. So it's a big space for us. We've got on-site controllers. If you need a fill-in at your store or need an internal control review, we can do all that. So that's really propelled our growth. That's one of the areas that's propelled our growth over the last 13 years. And we're now a top 100 firm in the country. So a little bit about us, and then I put my slide up here just so you have my email address in case you want to contact me or the firm after with follow-up questions that we don't cover today. Feel free to do it. Tim, I know you'll be at the Tri-State Convention coming up in Destin here in a few weeks. Our firm will be there as well. I'll be on site with a few of our partners, so you can reach out to us there as well if you want to talk more about the Tennessee law change and refunds. Little background here, there was, what brought this about is there was a lot of legislative pressure coming from different businesses in Tennessee for Tennessee to get a portion of their tax, their annual tax on businesses changed. And that's the franchise tax. So there's a franchise and excise tax, but specifically the franchise tax was coming under pressure through litigation. And so Tennessee made a move in January and introduced a bill to the House. And the Senate and the House debated that bill through April. And then it was finalized and signed into law in May.
So, and just to add a little bit of color to that,
Sure.
the business community was heavily engaged on this bill. It came as the initial proposal didn't necessarily come from a House or Senate leader, but came from the governor's office, particularly the Department of Revenue saw the issue. Worked, it took 3 or 4 months. We'll talk about some of the issues in it, Robert. I think the one piece you'll hear about is the transparency piece. In terms of, who's claimed refunds. I think it landed in a very good spot for businesses in Tennessee. There was concern that every business who claimed a refund was going to have to put the exact amount of money that they received if they claimed a refund. But I think, kind of some of the lobbying and education on this issue, I think it landed in a very good spot. And one of the key differences was how far did the refunds go back? And the House had proposed 1 year. The Senate was looking at 3 years, technically 4, I guess, if you look at it a certain way. And it landed at the full 3 years, which is great for businesses. It was the right thing to do. And we appreciate, Commissioner Giordano for all his leadership on this. And, and the House and Senate leaders did a fantastic job with it.
Yeah, Tim, this was definitely a win for a lot of our clients. And I know there was a lot of work that went into it and a lot of different people involved getting this done. So we're excited about it. And so first thing we want to talk about, just going to give you a high level overview here of what changed with the calculation. Your CPA is well aware of this. You can reach out to them with questions, but basically the old calculation of the franchise tax was based on 2 factors, and it was based on a property base and a net worth base. And so whichever was higher, your property base or your net worth of your business, is what you got taxed on through the Tennessee tax rate. And that was paid annually, and you also had to pay quarterly payments. Well, what this bill did was it eliminated the property base. So now this tax is only based on your net worth. And this is specifically important for dealers because that property base a lot of times was the highest factor that you got taxed on, because you've got a lot of inventory at the end of the year. You've got rent that you pay to a third party company, or you pay to your related real estate company, or you have buildings, land and buildings that really bump that property value up. And so your tax was higher as a result. So that piece has been eliminated. So now it's just net worth, which is your assets minus your liabilities. And so a lot of businesses, including a lot of our dealers, are seeing that that's a huge benefit to them. Like Tim said, going backwards, we can claim these refunds and correct the calculation. And then going forward, it's going to save dealers a lot of money as well. Just a few points here on the refunds before we get into how to claim them and how much you could potentially get. Most of you probably have already received a notice from Tennessee in the mail. I've seen over the past few weeks, a lot of dealers have sent me these notices that they're potentially eligible for these refunds. If you haven't gotten one, don't panic, it's fine. You still may be eligible, so talk to your tax advisor about that. And then as Tim noted, this bill went back a period of time, so we think that's a win. And it actually went back for returns filed after January 1st, 2021, and for periods ending after March 31st, 2020, you can go back and potentially recalculate this tax. So that's a 4-year period. That's actually 4 years. So you've got 2020, 2021, 22, and 2023 that you can take a look at and see if you are eligible for refunds on those periods. Something important though for 2023, a lot of you, your CPAs probably already filed your 23 LLC or S Corp return or C Corp return. If that's already been filed, then this is already handled. But if not, the 2023 returns have to be filed under the old method. So that means you still have to calculate the tax based on the pre-tax law change. So old method, and then you have to amend that 2023 return if you think you're eligible for a refund. So 23 stays the same, and then you get to change it after it's filed. The Tennessee initially indicated something important here. If you've got entities that you've dissolved, if you had an old dealership that you've sold, maybe a property company that shut down, a leasing company, those entities that have been dissolved in the state, Tennessee has initially indicated that you cannot go back and claim refunds for that 4-year period for those entities. We've heard a little bit of conflicting guidance on this via Tennessee webinar that was put out a couple of weeks ago. They said that may actually be an option. So again, recommend you consult with your tax advisor and see if you can still get a refund for any dissolved entities that you have. Tax credits, just a quick note, there are some tax credits that you can take on your Tennessee tax return. And some dealers may have done that. I don't see this a lot in the dealer space, but there's a job tax credit and some others. If you had those credits and you go back and change these years that we're talking about, those credits still remain intact. They could change the carryover amount as a consequence of amending those returns, but just something to be mindful of, they still remain. And then last point here, there is a waiver that you have to do when you file these amended returns and claim refunds, that you have to waive all your legal rights against the state related to this issue. Like Tim said, there was a lot of legal pressure on the forefront. And so as part of this process, Tennessee is asking you to waive the right to future litigation around this topic, which we don't see as a negative at all. We think the bill itself was a win, and it's going back 4 years, which is great for our dealer clients and other clients.
Yeah, I think on that point, the waiver of legal rights, it was going to be a bigger issue if it was a 1-year look back, because I think Robert pointed out that, generally you can amend your returns looking back for at least 3 years. And so when the bill landed where it did on 3 years, essentially the legal rights that you were waiving or are waiving are much less. So that was a big win.
This is probably the most important slide. When can you start filing and when does that period end? So May 15th was the first date. We've already filed a lot of these returns internally, the amended returns and the refund claims. The last day to file is November 30th. You have to get this done by November 30th. So mark your calendar. If you miss that date, there's no option to do the filings at that point. You can't do the amended returns and you cannot do the refund claims after November 30th. So make sure that's marked and make sure your CPA is aware of it as well. Refunds are not automatic. If you do these amended returns, Tennessee is going to review them. From what I've seen, Tennessee's taking about a week to review the amended returns and the claims. And they're sending out a notice in the mail to you saying that they need a couple more weeks to process the refund. And so this is happening pretty quickly. Once you get these filed, it should be a 2 to 4 week period probably before you see a refund come in the mail. If they take longer, if it goes over 90 days after you've made the claim, they will pay you interest on the balance. So there is a little bit of a benefit that they're giving you there if they delay their processing time. So here's how you file. A lot of you are familiar with this. It's through TNTAP. This is the best way to do it. You can go to TNTAP. I've got the website up here on the slide. And a lot of you are familiar with this because you pay your tax payments there annually. You may make quarterly payments on this website. This is where you go to do the process. So the steps are, the first step is to amend your tax returns that you think you're eligible for a refund. And the second step is to file the refund claim form for all years that you've done the amended return. So there's really two important things there. And then Tennessee has strongly recommended that we do this electronically through TNTAP. It's the best way to do it. You can do it via paper filing, but it could delay the processing time, and I'm sure it certainly will. Just a quick slide here on what that second step looks like on paper. That's the claim for refund over to the right. If you want to go back later and reference this, if you're doing it on paper, this is the form that you would use to do it. So you've got that over on the right side. And then there's one last step in this process when you're on TNTAP and going through it. You do have to go through a checklist on a report of debts. I've noted that over to the left on the slide. It's about 7 to 8 questions on whether you owe any outstanding tax liabilities to the state, if you have any outstanding legal liabilities in the state. They actually list child support on there, even though this is for entities. So they're really covering a range of potential debts that the owners of the LLC may have. So you have to go through and check no on all those in order to qualify for this refund. So here's what everybody wants to hear. How much should you expect in a refund? I gave you a little snippet at the top of what the old calculation looked like. It's pretty simple. It's just 3 lines. These are summary lines. There's some background support, but at the end of the day, there's 3 lines that this tax is based on. And it's the first line is your net worth, like we talked about. And the second line is your property base. And the higher of those two is used to calculate the tax. It's 25 cents on every $100. That's how the tax is calculated. And so in the past, it was the higher of line 1 or 2 that generated the tax due. And now it's just line 1, which is your net worth. So let me show you how this works out in some numbers here. I've given you an example of a taxpayer that had 2 million in net worth in the past, and they had 8 million in property base. So they had $20,000 in tax based on line 2 because it was higher. And so under the new method, you simply take the 8 million minus the 2 million, which is 6, and multiply it by the tax rate, and that's your potential refund. So in this scenario, we've got a $6 million difference between really the old and the new method, and you multiply that by the tax rate, and that's a $15,000 refund for this client. So this client paid $20,000 originally, and if they go back and amend their return and file the refund claim, they should expect $15,000 as a refund. And that really adds up. I kind of want to hammer that home because we've seen that the refunds be pretty significant, especially going back 4 years. A lot of clients are eligible for all 4 years in a refund. So those can add up quickly. And as you know, with dealers and inventory at year end, you may have a lot of it. And so you've paid a lot of this tax. And so those refund numbers have been pretty large. A few key points here as well. The department will mail the refund payment to the address on file. So when you go on TNTAP, you should have an address on file with them. That's where they're going to mail it. You do have the option to change that address. So for example, if you were filing this for a dissolved entity and you want the check going a different place, you can confirm that address on TNTAP when you're going through the process, make that change, and they'll send the check to the correct address. Also, if you get a refund, a question may come up, or if you're eligible for a refund, a question may be, can I apply that forward? Let's say I'm expecting tax due in 2024. Can I just apply that forward to 2024? Tennessee will not let you do that. They're just going to refund whatever you're due. Something important to note that Tim and I were talking about, this information will be made public. And Tim, you've already touched on this a little bit. It's going to be for a short time frame. So if you do file one of these claims, it's May 31st, 2025, and really stays open for about a month. But they're going to only publish, they will publish the entities that receive the refunds, but they're only going to publish ranges of the refund amounts. So no specific dollar amounts. If you filed and you haven't gotten a refund yet, they'll still publish the entity name, but they won't publish a range for the amount.
So I think going back, just to kind of stress the point, I mean, you'll see the three ranges. So what will end up happening is on the for those over $10,000, you're going to be, if you make a refund claim, you'll be on a list of, thousands of companies that have claimed for the amounts. And so in terms of risk or, I would not have significant concerns about, being on that list, kind of where the legislation landed, because it's just going to be a broad number of businesses who operate in the state, and they're going to be successful businesses who claim those refunds. So just wanted to share that.
And there's going to be, to your point, Tim, there's going to be many, many, many on that list. I don't know anybody that's eligible that's not trying to take advantage of this refund opportunity. So
yeah, as an example, I was on a call with the department, and they'd said they'd already approved. They hadn't distributed, but they had internally approved, I think like $80 million in refunds already. And that was 2 weeks ago. And so, it just opened on May 15th. So businesses are filing.
yeah. Few items I wanted to note, as you're looking forward after this tax law change, what things should you be aware of? The top one, consolidated net worth election, this probably won't apply to a lot of dealers on this call, but it will apply to some. If you have a holding company structure that maybe a holding company owns your dealership entity or multiple dealership entities for you, you need to ask your CPA about this consolidated net worth election. And what it helps do is eliminate you getting double taxed on your net worth. Like we said, with the new tax law, the tax is purely based on net worth at this point. And so if you've got that holding company structure, there is potential to get double taxed, but if you make this election, that remedies that problem. So definitely look into that going forward if you haven't in the past. And then the second thing is quarterly payments. Many of you have quarterly payments coming up on June 15th. That's your second quarter estimate for 2024. And those may need to be recalculated based on your 2023 amended return. So if you do an amendment for 2023 and claim a refund, your tax is less than what you originally calculated. And so that means that the required payment for 2024 is also likely less. So definitely check with your CPA on that, and may help you a little bit on cash flow as we go throughout 24. The last point I really don't think is going to apply, but Tennessee has listed this, gross receipts returns. This really is for other industries, not dealership related. But if you do file a gross receipts return for certain types of businesses, if maybe a dealer client has a certain type of business that falls under this filing, you may have to amend those returns as a result of amending the franchise tax return, because it changes your deductions and credits on that return. So just something to be mindful of. And last slide here, as we're looking forward, what can you do to save some tax going forward? Because the franchise tax now is just on net worth, higher leverage taxpayers are going to see a reduction in tax. If you've got more debt, that means you have less net worth. And so you're going to have a lower tax bill at the end of the year. That's not always a great financial decision, but you just have to weigh it out. Cost segregation study. If you buy a new piece of real estate, definitely look into a cost segregation study. What that does is it takes your building that you just bought and it breaks it down into multiple depreciable categories. And so you can take depreciation for book and tax faster, which lowers your net worth. So again, that would lower your net worth and save some tax potentially. And then pulling out cash from the companies under distributions. Again, this may not make sense for your financial statements or your dealership financial statement where you've got working capital requirements and net worth covenants. But definitely consider how that impacts your tax. If you want to take cash out of the company, do it before the end of the year. That way your net worth is less and you've got less of this franchise tax. Tim, I'm going to open it up for questions. If anything's come through and kind of let you go through that piece, but I appreciate everybody listening, and we're glad to do it with TAA. And Tim, I'll let you take over.
So thank you, Robert. Fantastic job. A few notes. The PowerPoint will be available for those who want it. They worked really hard on this, and we're actually going to include some of it as part of our convention materials down in Destin. So if you're down there and get a packet, this will be in there. One thing I would note before getting into the questions, the department has been very active in trying to answer any questions. So if you are working, with HHM or your accountant and they have a question and you're trying to get an answer from the department, they have been very helpful to the trade associations to get those answered. And if you're struggling via directly, don't hesitate to reach out to us to say, listen, we have a member who has this question, and they'll probably already have answered, but if not, we want to be here to help. I think going through, we talked about the refunds and the importance of making sure people file on time because they lose the opportunity. Is everyone eligible for a refund, Robert?
No,
Okay.
not everybody's eligible. You have to go back and look at your tax return and see if you paid tax based on net worth or property base. And if you paid the tax based on your property base, which is line 2 on that little calculation, you likely are eligible. So.
A little more complicated. On amended returns, should net worth amount be pulled from tax returns or dealer financial statements for the year-end period?
Tax returns.
Okay. So how complicated is this to do if you haven't done the net worth statement? Do you generally have all the info readily available within your financials?
Yeah, it's all there. You're going to provide your CPA, your dealer financial statement for December at the end of the year. You're going to give them all the stuff they need for the tax return. And as they prepare the tax return, they'll make sure the net worth number is correct, that it matches up with your books and records. If there's any adjustments, those are accounted for. And so that's all part of the regular tax return process. So we do have that information. Your CPA is going to have that information already on file to do these amendments.
So we talked about the transparency piece and you having your company name. Is there any downside to filing for a refund?
We don't see it as a negative at all. Like you said, Tim, we're going back 4 years. We think this is a win for everybody. And it really accomplishes what the legal pressure was trying to do. Again, it is going to be published in 2025, a list of everybody, but we don't see that as a big issue. There's going to be lots of businesses on that list.
Sure. So I think the question is this taxable income in 2024 for your federal returns? And I think they're referring to the refunds.
Yeah. It is going to be taxable income. Again, I'd say consult with your tax advisor. My position is that it's going to be taxable when received. So in the year received, that's when you're going to pick up the refund as taxable income. So it will generate federal tax as your income flows to your personal return. And then it likely is going to be taxable for the state as well. So
you talked about, the one the one piece I guess I didn't touch on was the budgetary impact of these. To give you an idea of the scope of what the refunds mean to the state, the estimated cost for the refunds alone was $1.4 billion was the estimate. And I don't know what assumptions they made about businesses claiming, not claiming, how they, deciphered who they thought would be eligible. But that was the estimate. There was also the go forward cost, which is the state estimates it's going to be $450 million less in revenue going forward. So you talked about the looking forward, what should companies be thinking about as they try to make sure their net worth statement, reduces their tax liabilities? Is there things they should be looking at in the next, 6 to 18 months, as they move forward as a company, knowing this is now the tax system in Tennessee?
Yeah, I mean, there's a few ways you can reduce your net worth and lower that tax bill. But again, like on my other slide, I said sometimes that doesn't make sense financially or for your internal financials, or maybe you need a reviewed or audited statement for the bank. So that's not always the right answer to try to minimize net worth. But there are some ways you can do it through taking out cash distributions to the owners. And definitely if you're looking ahead and you have a building project coming up, you're going to buy a piece of real estate, look at a cost segregation study. It's going to help you in multiple ways. It's going to help you save on your personal taxes, and it's going to help save on this Tennessee net worth tax as well.
Great. Well, I think that wraps up the questions. We do try to keep these tight, and we know you all are busy, so we generally try to allow for 30 to 45 minutes for these going forward. Robert, I've find it tremendously educational, and hopefully our members did as well. And I think you shared his email. Maybe we pull that up again just at the very end so people have his email on the screen if they want to write that down or jot that down. Again, we appreciate all our members as well as the clients of HHM joining. If there's anything we can do to help you as an organization, we always want to do that. Robert, I'm going to let you close, and then we'll wrap the webinar.
Yep. Thanks everybody for listening today. HHM is proud to do this presentation with TAA, and look forward to seeing many of you down in Destin here in a few weeks, and we can talk more then. So thank you, everybody.
Thank you. We appreciate all your time.